Hello and welcome back to London. It's a big week for the central banks with both the Bank of England and the ECB meeting. So what are we to expect? Well, I've been speaking to Craig Erlam from Alpari. Craig, let's start by talking about the ECB. There's been so much attention to the inflation data, and I was reading a bit of Reuters copy before I came here saying something like the ECB will keep its big bazooka in its locker because inflation now is looking a bit more upbeat than it was when there was worries about deflation. Have we really got to the point where we're looking at such small margins of inflation in terms of the ECB taking action?
Well, I think yes and no. I mean, I don't think we're going to necessarily see any action from the ECB for a number of months now. I think we did see a reaction to this sharp fall in inflation from 1.1 to 0.7. We have seen it start to creep high, but they've also warned that disinflation, or falling inflation as it were, is going to be something we're going to have to become accustomed to. For now, we've not only got the fact that we've still got this high euro exchange rate when compared to the other currencies, but at the same time, when we've got intentional deflation in countries such as Greece and Spain, we're going to get disinflation across the entire region. So I think it's just something we've got to become used to. And you talk about that the big weapon they've got here. I mean, I don't think we're going to see negative deposit rates anytime soon, and I think they're going to be very reluctant to use anything like that, because at the end of the day that would severely complicate things in the financial systems. I don't think even the ECB know at this point what kind of the full impact that this would have negatively, in particular on the banks in the region, and at a time when the banks are so unstable as it is, they're going to be very reluctant to use anything like that. So I think for now we've seen the end of stimulus, at least in the short term, from the ECB. So what will push them into using it? Is it a case that they're waiting for a big crisis, or is it simply that they're monitoring that inflation figure the whole time? I think their sole focus is inflation. They're also going to be monitoring, even though they won't come out and explicitly say it, they're going to be monitoring the exchange rate. If the exchange rate nips above 140, this is something they're going to have to take a look at. But then that also has an impact on inflation. That tends to drag inflation lower. So the two do kind of coincide with each other. But then they've got to look at the threat to stability in the eurozone as well. But I think the main focus for them has to be inflation. Like I say, the mandate is around price stability. So I think before they start looking at things like negative deposit rates, there has to be a real threat of deflation, and 0.7% in my view wasn't a real threat of deflation. I think that was a temporary drop. I think despite the rebound that we saw in November wasn't any reflection of the ECB rate cut, because it only happened earlier that month. I think it was just a natural bounce that we saw in the figure following such a sharp drop off. I think we'd have to see something below 0.5%, I think, before we'd see the ECB seriously considering something as drastic as negative deposit rates.
Yeah, I've just turned our attention to the Bank of England. Just quickly, nothing's going to happen there, right?
No.
Okay, so surely the attention has to be sterling. I saw that sterling had reached an 11-month high, as in the sterling index. Surely it's starting to look overbought now.
Well, you'd say that, but it's just broken some really key levels. So, if anything, I think we're now going to see it go from strength to strength. I mean, you look at the UK, and already we've seen the amount of time before interest rates are going to be discussed brought down from around 3 years to around 18 months. So that's going to be positive for sterling. We've also seen it break key levels, like say technically pushing it high. We're seeing the data continuing to improve. We're expecting of the G7 countries for it to be the fastest grower in 2013. So I think all in all, I can only really see it heading in one direction. There may be temporary pullbacks along the way, but as far as I'm concerned, I don't necessarily see any significant pullbacks unless we do see the Fed, of course, taper its assets purchases, which is positive for the US dollar and could therefore start to pull it back a little. But for now, I can only see it going from strength to strength, and I think 167 in the coming couple of months is a very realistic target.
Well, thank you to Craig. Later in the week, I'll be taking a look at the phenomenon which is Bitcoin, but that's all we have time for now. Goodbye.